let's get more from our guests for the first part of the program today. We have Mark Matthews, Asia strategist for Macquarie Capital Securities. And you're wondering, why should we listen to Mark? Well, back in September, Mark called for Indonesia and Singapore with high yields to outperform, and they certainly have since then. In fact, beating and outperforming the MSCI Asia average. I haven't seen you since the New Year, so happy New Year to you, Mark. To you too. Let's talk about this chit-chat about a bubble on the mainland. It seems to be the talk of the town, or really globally at this point. We have Jim Chanos earlier saying that there is a bubble in terms of the property investment and fixed asset investment. How do you see things on the mainland?
Well, somebody once told me that the best definition of a bubble is something that has gone up a lot that I didn't buy.
Right.
In other words, people have sour grapes because they weren't part of this big reflation trade, so they're saying it's a bubble. So what is a bubble? I always find it very difficult to define, but I think it's probably safe to say that in assets we're not seeing a bubble in China. In most assets, in stocks, I don't think there's a bubble in A shares because they're only trading at their average, long-term average, so mid-teens kind of valuation, nowhere near as high as they got back in 2007. But there is a credit bubble. Undeniably, there's a credit bubble because they lent, $9.5 trillion Yuan last year, which is, well over $1 trillion, and their economy's only $4-point-something trillion. So the amount of liquidity that was released into the system was unprecedented, and they don't want this credit bubble to become an asset bubble. And so that's why we're seeing, what's going on today in terms of policy.
Now you have an interesting gauge of what's a bubble as well, with the Sotheby's stock price, the auction house.
Yes. So
maybe you can explain this one.
I borrowed this from a colleague of mine in Geneva, Maurizio Sansi, who's very good at charts, and he found going back to the mid-'80s that there you go, you've got it up there.
There you go.
Sotheby's, which is obviously an auction house, rolls over before the market crashes. So it happened before the Japan bubble in 1989. It happened before the tech bubble in 1999, 2000. And it rolled over before the subprime crisis. And the important thing about this chart, getting back to your point about bubbles, is that we're nowhere near the kind of price that Sotheby's got to back in 88 or 99 or 2007. We're still about 30 to 60% below.
Yeah. So high-price auctionears is one gauge to see if there's a bubble.
For whatever strange reason, and I tried to think, well, what could the reason be? And the only thing I can think of is rich people are better informed. Or maybe they just possess some sixth sense.
Maybe a little excessive as well. Okay, Mark, let's talk about these tightening measures that are taking place on the mainland. We had a retreat in Chinese stocks, 8 shares here in Hong Kong on fears of more tightening coming from the central bank. And then we have talk of depegging the currency as one of the measures. What do you think that's going to happen with the yuan, and is it worth investing into?
Well, personally, I've been moving my money into renminbi, so I'm talking my own book here. But I think that if it does happen, it's not going to be big, and it's probably actually not that undervalued. And I also think that people who've been calling for renminbi reval over the last 10 years, it's been a case of the boy who cried wolf because it just hasn't happened. But just like the U.S. housing crisis was like this slow train crash that we saw coming for a long, long time, and then all of a sudden, boom. I think those of us who say, oh, they're never going to revalue, one day will wake up and they are going to revalue because it would actually solve a lot of their problems. But I can't tell you when it's going to happen or what magnitude. I do think what's most interesting is that the United States has become so quiet because they used to be always complaining, using the same tactics they did against the Japanese in the 80s. Saying you've got to revalue, you've got to revalue. And now if you listen to the comments coming out of Washington, it's just radio silence, which I interpret as they've learned, don't boss the Chinese around. They don't like it, so we'll just be quiet.
Or maybe they have bigger issues right now at home.
Another good point.
Yeah, okay, well, there you go. Mark, let me just ask you what the problems that we're seeing in China. Some would say problems. Some people would say it's not an issue. But what's your call on Chinese stocks right now? To trim positions, sell off, or buy more on dips? Okay.
Well, first of all, I'm not our Mr. Asia strategist. That's a gentleman named Michael Kurtz, who I believe you also know. He's in Shanghai. And so he is saying that Chinese stocks look good. And to my earlier point, they're not overvalued. So we could be in this tightening phase over the next quarter, which is not generous toward asset prices, including stocks. But longer term, the Chinese story is still a good one. And when I look just across the board of stocks there's a lot of really cheap stocks in China. There really, really are, and good growth. So not bearish on China.
Okay, well, let's take it broader then and talk about this recent market correction. We've seen stocks fall for about 6 or 7 sessions now. And you have an interesting gauge at Macquarie. You wrote this in your client note in that one of the salesperson has a sentiment index at Macquarie.
Oh, yes, that's right.
Yeah, showing that markets were overbought.
Absolutely.
So
absolutely.
this correction comes as no surprise then?
Yeah, so, well, if you were to use that index, because he is measuring, advances and advancers and decliners, volume of advancers and decliners. He's got 4 different variables, and once again, that's a very accurate gauge. But if you look at the latest investor intelligence survey, the amount of bearish newsletter writers in the United States is something like 15%. I don't know the exact number, but it's basically the lowest since April of 1987. So if you're a contrarian investor, that's telling you that there's not a lot of bears left out there, which isn't a very good thing.
Which isn't a very good thing.
No, it's not a very good thing because it means everybody's bullish and they're invested.
Oh dear. So that means you should maybe go the opposite direction then.
No, because when you look at these sentiment indicators, if just because a sentiment indicator gets into overbought range doesn't mean the market's going to collapse. But if it's an accurate sentiment reader, which ours is, what it means is the market might collapse, but more likely it's just going to go sideways for a while. So,
is that what's going to happen from here then?
Well, it already has, and in fact, our sentiment indicator was telling us that the markets were overbought, back in the third quarter last year, and of course they didn't collapse; they just went sideways.
Okay, so some sideways trading from here on for a few months.
Well, my thinking is yes,
okay.
actually.
Well, Mark